Good morning. Thursday seems to have come a lot faster this week. Welcome to today's episode of Morning Wealth. I'm taking some feedback from a listener to slow down a bit. So I'm going to try that. So 3 things that we can look to here: vaccine hopes, Fed minutes, and what to expect on the NFP number. Wall Street closed mixed on Wednesday, with the Nasdaq booking a fresh high as positive COVID vaccine news and strong US economic data nudged sentiment higher. On the pandemic side, an online study of a vaccine candidate being developed by Pfizer showed that the drug created neutralizing antibodies. As promising as it may seem, it's important to realize that only 45 people participated in that trial. There are other companies with vaccines in various stages of trial, so the hope is that more promising news will follow. The Dow lost about 0.3%. In contrast, S&P 500 climbed about 0.5% and the Nasdaq hit a new record. Currently, more than 12 states have paused or rolled back their reopenings as cases jumped 47% in a week. On the macro side, ADP employment data showed private payrolls climbed about 2.37 million in June, while payrolls of May were revised higher. The revision was dramatic. So the May figure was revised to a gain of 3.07 million from an original estimate of minus 2.76 million. That was some revision. Meanwhile, the ISM manufacturing index grew to its highest level since April 2019. That followed similar results in overseas surveys, like factories in Asia and Europe continued their return to normality in June as restrictions designed to contain the virus were lifted. So we saw surveys in France, UK, Malaysia, Vietnam, Australia, Ireland, all of these countries showing manufacturing ISM or PMI is going up. Treasuries retreated yesterday, taking the 10-year yields up by 2 basis points to 0.68. The dollar dropped against every G10 counterpart except for the loonie. Gold dropped, and Asian equity futures are pointing to a mixed open. The Fed has little appetite for controlling the yield curve. FOMC officials had many questions about its benefits when they discussed the pros and cons last month, minutes from the June's meeting show. Various participants advocated that the economy will need support for some time and called on the central bank to communicate a more explicit form of forward guidance. So the emphasis was more on forward guidance rather than yield curve control. US crude inventories fell for the first time since May, with nationwide stocks dropping 7.2 million barrels last week, which is the biggest draw since December. This is according to a EIA report. Meanwhile, OPEC slashed oil production in June to the lowest level since the Gulf War in 1991. WTI traded higher, hovering close to about $40 a barrel. On the equity side, FedEx shares jumped 12% after the company reported Christmas-like levels of spending last quarter. Tesla's recent gains have made it the most valuable car company in the world by market capitalization. Tesla shares rose 3.7%, pushing its market cap to $207 billion, past Toyota's market cap of $201 billion. On the Forex side, non-farm payrolls will be released on Thursday this week instead of Friday due to the holiday. And had there not been this recent surge in US cases and pause in reopening by major states, the prospect of a future labor market recovery would be very good for both currencies and equities. Unfortunately, investors will look at the June data and worry about whether these gains can be sustained in the second quarter. This means that a weaker jobs report would have a more significant impact on currencies and equities than a strong one. Economists are expecting a recovery of 3 million jobs last month, with the unemployment rate falling to 12.5% from 13.3% and average hourly earnings dropping to negative 0.8%. So that's what we will be looking forward to with the NFP number later today. Stay safe and healthy, everyone, and speak soon.